And welcome to the CNBC special, Taking Stock. I am Brian Sullivan. Jim has the week off tonight. A deep dive into the world's second biggest economy, China, moving to ease its strict zero COVID measures sooner than many expected, all amid a spike in cases there. That is touching off concerns. The move could actually cause more short-term pain, not just for China, but around the world. And more short-term pain is not what any investor is looking for. The Shanghai Composite is pacing for its worst year in 4. The Hang Seng in Hong Kong on track for its worst year in more than a decade. As COVID, political uncertainty, competition, and more all weigh on that nation and its investors. And despite today's rally that erased most of the week's losses for the Dow and the S&P back home, all three averages do remain on pace for their worst year since 2008. No doubt, China, a part of the U.S. investing story as well. Tonight, we are taking stock of what it all means for you and your money. Here's a taste of what's on deck in a few moments. Haven Capital's Kyle Bass will join us. He'll get the outspoken critics' take on China's reopening, their trade, and more. And when you talk Chinese industry, you have to talk about semiconductors, the companies most exposed to the region, the ones best positioned to weather any storms. Plus, your playbook for next year. The CIO of Crane Shares, which runs the China tech ETF K-Web, on where he sees any opportunity right now. All right, good evening, everybody. Thank you very much for joining us tonight and all this week. We're going to get to all that. But let us begin with the travel impact. The U.S. responding to China's reopening with a counter plan set to require all travelers coming from China to the U.S. to provide a negative COVID test before entering America beginning next week. This and other countries are following suit. Seema Mody is tracking that and many other travel angles for us, and one of the biggest and most critical industries we have with China, which is travel.
It really is, Brian. Good evening. That's right. Japan, Italy, and the U.S. are among the 6 countries that have now announced new testing requirements for passengers traveling from China. And experts say a lack of transparency around the virus could lead other countries to do the same. Now, Chinese stocks have been rallying over the last month as Beijing takes steps to reopen its economy. Evercore ISI not expecting the country to backpedal even in the face of rising cases. Starting January 8th, travelers will no longer have to quarantine on their return to China. After being essentially locked down for 3 years, the CEO, one of the largest booking platforms, is betting on a Chinese travel boom.
You have hundreds of millions, literally hundreds of millions of Chinese customers who want to travel. They've been wanting to travel for a couple of years. They've not been able to get out of the country. They want to go. So what's going to happen to global travel the global travel industry when several hundred million Chinese people start traveling outbound to the U.S., to Europe, to Southeast Asia? In terms of demand, it's going to be a spike.
Now, prior to the pandemic, Chinese travelers played a vital role in driving the travel economy. Just here in the U.S., spending on average $6,700 per trip. That's about 50% more than other international groups. That's according to the U.S. Travel Association. And really fueling the luxury sector as well. Profits there. Now, Fogel says spring of 2023, that's when he's expecting activity to really pick up. Although it's likely to start right around Lunar New Year, as long as we don't see any new restrictions come in the few weeks ahead. Brian?
You know, I was prepping for this because I wanted to be half as smart as you are, Seema. I did not realize the numbers were as big as they are. In 2017, it was more than 3 million people visited the U.S. from China. Came down a little bit. Of course, COVID just completely wiped it out. Is there any optimism that we could get back to those pre-COVID levels? That's a lot of money.
Yeah, it's a lot of money, and those are really good stats to share, Brian. In 2017, over 3 million visited the United States. That actually came down in 2019 to around 2.7 million, and that was partly due to the trade war that was taking place between the United States and China at the time. Fast forward into now, here in 2022, and going into next year, the expectation is that we see a large rebound. The question is to what extent. I think what we've heard so far from travel experts and CEOs is that they'll start to travel to broader Asia, make their way to Europe and the U.S. So perhaps in the second half of next year is when we start to see the Chinese traveler really return with gumption.
Is this testing supposed to really sort of hamstring travel in the near term, or people do what we did? You take the test, it's negative, you get on a plane. It's that simple.
Yeah, that's exactly right. And by the way, the Chinese are pretty used to taking COVID tests. Prior to this reopening just 8 weeks ago, they had to take 2 to 3 tests if they wanted to even travel between 2 provinces. So the idea that a COVID test, presenting a negative COVID test, would stop them from traveling, that from experts we've spoken to, that doesn't seem to be the case. The big question, Brian, does that change? Does that restriction get heightened to something larger?
We'll see. I remember Eunice Yoon telling us at one point they were taking 2 to 3 a week, forced to take 2 to 3 per week for maybe over a year. Seemingly insane. Seema Mody, thank you very much. All right, so let's continue this conversation and discuss how China's reopening could impact global trade and business, among other things, as well as maybe the long-term future of President Xi. Joining us now is Kyle Bass, founder and chief investment officer at Heyman Capital Management, a longtime critic of China, rightfully so. I'm going to start off with this because I don't think people realize sometimes, and we want to separate, Kyle, the Chinese people. I've been to China a couple times, met wonderful people, and the Chinese government. They are, like all governments, they are not representative of the people. This is Amnesty International. Last year, on Amnesty International, the human rights situation across China continues to deteriorate. Lawyers are harassed and intimidated. There are unfair trials, lengthy detention, lack of freedom of expression, arbitrary mass detention, torture against Muslims. That is a quick perusement. Are people underestimating the grimness of this administration of President Xi?
Yeah, well, first of all, Brian, great to be here tonight. Good to see you. Look, you separate the people from the government. Let's assume there are roughly 1.4 billion Chinese nationals in total. You have to remember there are 90 million members of the Chinese Communist Party. And the rest of the Chinese population is actually at the pleasure of the government, i.e. if the government asks you or demands for you to spy in any way for them in anything that you're doing in any foreign country, you're obligated to do so, or they will harass and or throw your family in jail. So it's actually hard to draw the line you want to draw, Brian, when you're thinking about it from a national security perspective for the West. So while I hear you, I'm not sure I hear you loud and clear. One of the other things that I want to mention is, especially given the last person that you interviewed here on travel, just remember, a month ago, Xi Jinping and the Communist Party were literally welding their citizens into their buildings. And now, all of a sudden, there's an about face where they are free to travel. And as you probably saw, Italy said that 50% of Chinese passengers landing in Italy are infected with COVID. And that's why you're seeing immediate responses from the West on demands for testing. But that policy change was diametrically opposed to the prior policy, which was actually one of Xi Jinping's, marquee policies. So you have to actually question whether or not Xi Jinping is actually losing some of his, let's just say, Communist Party position where he is, because one of his core policies was zero COVID and lockdowns, and they flipped that on its head and started shipping the Chinese population around the world half infected with COVID. So I just think it's worth talking about that a little bit more instead of maybe glossing over the fact that they've just changed policy and moved on.
Well, what do you think it means? Why would Xi do it? Is he afraid for his own reign?
Oh, I actually think it's different than that. Again, this is my opinion. It sure looks to me that the standing committee of the Politburo might have overruled his policies given the kind of outbreaks of riots across the country. And as you know, those riots started with kind of unfair pay and unclean, unsavory work conditions at Apple's iPhone manufacturer over there, and which of course had nothing to do with COVID at the time. And then they kind of morphed into much larger anti-COVID lockdown rallies, and China was forced to, I think, change their stripes. But Xi's policy was kind of hard and fast with an iron fist, and it flipped. So what I think is Xi got outvoted and overridden by the other members, and that is actually worth thinking about, because heretofore he has had supreme reign, and his policies have been carried through 100%. And this is a big one to be flipped.
And if it doesn't make sense for a lot of our viewers, you know, they hear that China wants to be the biggest economy, the most important economy in the world, and then China locks down their economy for a year plus longer than almost every other economy. Oftentimes, it's hard to square. I urge every one of our listeners and viewers to do just a background reading on Xi's childhood. This guy he's probably a sociopath. He was thrown into a work camp. He was marched through town, humiliated. His father was basically paraded through town and mocked as a former communist official. At one point, he lived in a cave, literally, and then came back to kind of take control. His childhood was so horrific by most standards. You just wonder, what is Xi's ultimate goal? Economically, well, it's not humanitarian. We know that.
You know, I think it goes back to when they announced China 2025 and their goal of global primacy. And if you go back and read the working papers, they basically stated in no other words other than they want global primacy in many of the world's, let's say, most interesting endeavors, right? Semiconductors, technology, base materials, rare earth metals, and they announced that, and they even gave the working papers to the rest of the world. Now they've since tried to recant, but I think their position is global primacy at any and all costs. And I think that our hope of China westernizing, we made a bet on them back in 2001, allowing them to ascend to WTO, thinking that if we showed them how democracy and how investment in your economy can really produce fantastic returns and grow your GDP fantastically, it has actually been a bad bet. And they've gone any other way other than going in reverse. And so, Brian, I think that going forward, we're going to see more tension between the two. I think this travel blip is yet a blip. You mentioned 3 million people traveling to the U.S. in 2017. Remember, there were 450,000 Chinese students living and studying in America. 3 million is not that many.
Yeah, you know, and you talked about global primacy. I know that Xi was just in the Middle East. You look at, of course, I talk about OPEC and oil a lot, and you look at where the oil is flowing, and you do wonder, is Xi's goal to sort of create two completely separate global economies with the exception of China exporting to us? Because the reality is we don't sell a lot to China. You can look at the trade data. It's pretty small. It's about the GDP of Maryland, I think it is. A lot of that scrap metal and things like that. We buy a ton from them. But if I'm President Xi, who arguably, by the way, despite his childhood, rough childhood, it seems to be fairly long thinking, is create a separate economy. Russia, China, maybe India, Iran, that part of the world, separate and distinct, maybe even from a currency perspective, than the United States.
Well, that's their hope, Brian. And I think it's important to make a few notes here. Number one, Xi is the first Chinese leader to ever visit the Middle East. Okay, that's an important. Second of all, you know, his visit to Saudi Arabia and his desire to kind of create an exchange, and this has been announced. He's trying to create an exchange that basically tries to get the counterparties in the Middle East to accept RMB or the yuan, China's national currency, as payment in exchange for oil. Well, that'd be an interesting. It's an interesting idea. It's still just an idea right now because no one around the world accepts the yuan, and you can't spend it anywhere because China still has a closed capital account. Now, what they're trying to do with their digital currency is insidious. It's worth us all paying a lot of attention to. They are trying to force the use of the Chinese digital, call it central bank digital currency, the digital yuan. They're trying to force its use amongst their trading partners and amongst investors in China. And that would kind of vault them overnight into being a currency that means something. Does it dethrone the dollar as the global hegemonic leader? It doesn't. But could it move it 8 to 10 percentage points, which would be a quantum leap from zero? It would be a quantum leap.
Final question. If they go for some massive post-COVID stimulus, monetary fiscal policy, boom, the rest of the world tightening, they go loose. Could that change our economy? Could that maybe keep us out of recession?
I don't think so, Brian. I think that if you look at China's reserve numbers, they are woefully under-reserved and under-dollared. I'm maybe one of the few that believes that the magical point at which COVID showed up was the point in time in which their capital account, or more importantly, their current account was headed below zero, meaning the net flows of capital in and out of China were headed towards a balance and potentially headed towards below zero. And you remember that they still have a closed capital account. We give them the benefit of the doubt of this GDP number converted back to dollars, when you and I both know if they freely traded the RMB and allowed the Chinese people to invest, travel, and spend abroad, their currency would drop 40 or 50% in its value, and their dollar-based GDP would go with it. So I think that the stimulus idea of China is something that I think they can jawbone the markets like they have been, but you'll see that they will not follow through in releasing speculative fervor back into real estate, because the real estate market really brought down their birth rate, and the speculative frenzy that went on there changed the balance of how China's economy operates, and Xi realized that, and I don't think he's going to reverse course there anytime soon.
Well, you put out a poll on J. Kyle Bass on Twitter. Would you invest in China right now? So far, 88% no. J. Kyle Bass, thanks for coming on, my man. It's a good discussion, a serious conversation. Have a great day. Happy New Year, Kyle.
Pleasure talking with you. Happy New Year, too, Brian.
All right, thank you very much. All right, so that's in China. Their markets do affect ours. But today we had a very good day in the stock market. Let's see how we did. All the major averages ending in the green. The Dow up 345. NASDAQ up 2.6%. By the way, we know it's been a rough year, and don't tell anybody this, but we've actually had a really good quarter. S&P's up like 10% this quarter. And with today's move, the Dow and the S&P turning positive for the week. That's thanks in part to Apple, biggest company in the markets, biggest company in the world, snapping a 4-day slide, still on pace for its worst year since 2008. But a little bright spot heading into the new year. This quarter was actually very good for the U.S. equity markets. But again, don't tell anybody. It's just between us. All right, this CNBC special, Taking Stock 2023, is just getting started. Here's what's ahead.
Tonight, a chip glut in the offing? What China exposure means for the semis in 2023. Plus, source of concern? How will China's change in COVID policy impact how you get the goods? And deep impact. A closer read on the Far East economic heft you can't afford to ignore. That and more when we return on CNBC.